Do you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Well, hi, everyone. Welcome back to the show. I'm your host, Harold Green of Braintree Wealth Management, and it is time to stop doing what you hate. We have finally arrived at episode number 10, and we've been talking about financial advice versus financial propaganda. And in today's show, I want to take you from propaganda to a process. And I want to talk about why most investors never really had a real strategy. And over the last 9 episodes, we've done something most financial conversations never do. We didn't talk about hot stocks. We didn't debate predictions. We didn't sell any products. We exposed the systems that shape how investors think, act, make decisions, often without even realizing that they're doing it. Today, I want to bring everything together because once you strip away all the noise, the narratives, the incentives, the identities, and the propaganda, one uncomfortable truth remains, and it is this. Most investors never actually have a strategy. And what most people call a strategy, it isn't one. It's it's hope, it's wish, it's pray. Ask investors what their strategy is, and you'll usually hear one of these answers. I'm long-term, I'm diversified, I believe in innovation, I buy quality, I buy growth, I stay aggressive, I don't try to time the market. Those are all beliefs. They're not strategies. A strategy answers how decisions are made, what happens when things go wrong, how risk is controlled, how capital is protected, how opportunity is deployed, how behavior is managed under stress. You want to know the hardest thing about being an airline pilot? It's not flying the plane. It's what to do when the plane is having problems in the air and you got all these people on board. This is where they make their money. And they have to have a process. I used to be an air traffic controller, so I know a lot about this. They have a process. They have a checklist, right? Before they take off, checklist. Before they land, checklist. In flight, checklist, checklist, checklist. Why? Because this is how they control horrible outcomes and make them acceptable outcomes. And most investors, they never answer those questions explicitly. They inherit assumptions instead, and this is bad. And this is how propaganda fills the strategy gap. When there's no real strategy, something else fills the void. Narratives, rule of thumb, sound bites, media framing, social reinforcement, identity. This is how propaganda works. It doesn't force you to do anything. It substitutes for structure. It gives you just enough confidence to act without giving you a framework to survive. And that's why intelligent people, they overconcentrate. They ignore risk signals. They defend losing positions. They chase late stage narratives. They panic at the wrong time, freeze when action is required, not because they're irrational, because they were never operating from a process. And a lot of times, this is why it takes people 5 to 6 years to recover in the market when they sell at the wrong time. They lock in their losses. And this is an investment show. All investments do carry risk of loss. Past performance is no indicator of future results. You got to make sure you understand your due diligence, do your due diligence, understand your time horizons, and make sure you're investing according to a well-balanced, comprehensive financial plan that has hopefully all of your goals and dreams built in. But a lot of people, they don't have a plan. They don't have a process. And the common thread for me through every episode is this. If we look back at what we've covered, the financial media, they amplify emotion. Incentives distort the advice. Like, why are you doing this? Because somebody's getting paid for you to do it. Fees and risk, they hide in complexity. Aggressive investors, they blow up without structure. DIY investors, they become their own blind spot. And identity overrides risk management. Different symptoms, but it's the same root cause. It's lack of a repeatable decision-making framework. And when outcomes depend on being right, timely, timed correctly, narratives holding up, confidence staying intact, I ain't scared, I'm not getting scared, Failure could be inevitable. And this is why real investing is not about being right. Markets do not reward intelligence consistently, they reward durability, adaptability, liquidity, discipline, process. And being right helps, but surviving long enough to benefit from being right, it matters more. Guys would say, I bought Apple, I was right. But they can survive the ups and the downs of holding on to Apple through 50% downturns, 60% downturns, and then it being up like 10, 15,000%. A lot of those people are still alive, but they sold that stuff a long time ago and they missed out. And this is where most advice fails because it focuses on like what to own, not how to operate. And I want to talk a little bit about why rapid retire exists in the first place. I know you guys have heard me beat on this and beat on this and beat on this, but the retirement situation hasn't changed for a lot of people. It's still the same. And rapid was not built to chase returns or make predictions or optimize one outcome over the other or to even sell products. It was built to solve a very specific problem. And investors were making decisions without a system that could survive stress. Stress is a big one. In rapid, it replaces belief with structure, reaction with rules, identity with process, and hope with preparation. Like I hope I have enough when I get there. I hope this thing works out. I hope, Harold, you're the right person for me. I hope, I hope, I hope. It gives investors something they never had before, a way to make decisions before emotion kicks in. Like we already know what we're going to do. We already know what we're going to sell. We already know. And what this episode is going to do is we're going to define what a real strategy actually is. We're going to explain why process beats prediction. We're going to show how rapid neutralizes every failure mode we've discussed. And we're going to connect structure to confidence without ego, like no chest pounding here, all right? And explain how investors move from propaganda driven behavior to process driven outcomes. Very important. This is not about doing less, it's about doing things on purpose, AKA by design. All right. Now, I want to talk about what real investment process actually looks like and why almost no one is taught this. All right. So, most people are never shown a process because most investors believe a process goes something like this. All right. Asset allocation, diversification, rebalancing, staying invested, controlling emotions. Those are components of a process. They're not a process. A real process governs how we make our decisions, right? Why are we picking these things? And when decisions are revisited, all right, what triggers us to take a look at that again? Okay. Is it comparative analysis? Like, what is it? What triggers action? When do we pull the trigger? What prevents overreaction? How do we not get emotional and buy into a narrative or, assume that somebody's telling the truth? Because what happens when assumptions fail? Very few investors are ever taught this. Instead, they're handed opinions and told to be disciplined, right? And the difference between rules and principles is this. Principles sound good, but the rules actually work. Principles say stay long term, buy quality, don't panic, think independently. Rules say if X happens, I do Y. If volatility exceeds Z, exposure changes. If capital is needed, it comes from this bucket. If assumptions break, the position is reduced. And principles, they guide intentions. Rules govern behavior. Okay, that's why I have speed limits on the freeway, right? And just like do not kill, thou shalt not kill, thou shalt not steal. Like when stress arrives, intentions disappear. Rules remain though. They don't go anywhere. And why most strategies fell under pressure is simply this. Under pressure, investors default to habit, identity, fear, overconfidence, narratives. This is why strategies that look brilliant on paper fail in real life. They rely on perfect discipline, constant clarity, emotional control, hindsight friendly decisions. And a real process assumes the opposite. Like stress will happen. You will get punched in the head and clarity will vanish because you might get knocked down for a minute, right? You get all fuzzy. Emotions are going to spike, right? Narratives will tempt, confidence will wobble, and it is designed accordingly. It's kind of crazy. I was watching TV the other day and a commercial came on and the girl runs in the kitchen and she's jumping up and down like, Mom and Dad, I got in. And mom's all screaming. And what does dad do? He goes to the app and he's looking at like refinancing the house to take equity out to pay for college. Like, bro, like now you look. And you know what? Honestly, this is where a lot of people are at. I'm not knocking it, but it's where people are at because everybody busy. Everybody got stuff to do. Everybody got stuff to do, right? And here's the thing. What rapid retire does differently than everything else is this. It starts where most strategies end. It assumes that markets are going to bust you upside the head. Volatility is going to show up. Narratives are going to break. Investors are going to feel pressure. It's going to get hot. And then it builds around those realities. Instead of asking, like, what should I own? Rapid retire ask, what job does this capital serve? When might it be needed? What risks are acceptable here? What happens if I'm wrong? What rules govern this decision? And ownership becomes secondary, function becomes first. And I think that is the greatest thing about being a fiduciary. You think about what your responsibilities are, and then you begin to fill in the blanks after that. You don't just say, let's do this and let's do that and hope it works out. You're not a fiduciary at that point. You're like either a salesperson or a comment or somewhere in between. And we want to talk about capital with the job descriptions because in a real process, capital, money, is not generic. Every dollar has a job. And I like to say it like this: no non performing assets in your financial system. Every asset in your financial system should be serving a purpose, and some ought to have what I call dual purposes. I call it DPD, dual purpose dollars. I'll give you an example. Some people say, Harold, I need cash. I need cash. I need cash. Where do you need the cash? Do you need it in the bank? Like, do you literally need $100,000 sitting in the bank right now? What purpose does $100,000 sitting in the bank serves you earning point whatever, whatever, whatever? Or even in a high yield savings account. Is there a dual purpose with that? No, it's giving me 5%. Well, is there a better place that you could put the money, keep and have it in cash and still have access to it that generates another purpose or serves another purpose? This is why I use my life insurance policies as my cash reserve system because if I die, there's a dual purpose. There's money for my wife that she gets tax free, right? She gets hundreds and hundreds of millions or whatever it is, tax free. The money's not just sitting in the bank. Well, Harold, you got to pay premiums on that. Yeah, I do. But I set up my portfolio so that it can help cover the premiums if need be. It's all in the process. Every dollar has a job. Some capital is meant to survive volatility, fund opportunity, absorb drawdowns, provide liquidity, and pursue asymmetry. Rapid, it enforces this separation. It's discipline. When capital has a job, decisions become clear. You no longer ask, do I believe in this? Like you ask, is this doing what it's supposed to do? Did it do what it do? So, I heard my cousin say that one day, and I was like, "Oh my God, this is like I'm so old. I'm not even up on the like terms anymore." But is this doing what it's supposed to do? And that question removes ego instantly. And here's why time horizons matter more than predictions. Most investors think in like outcomes, processes, they think in time. And time horizons, they answer how long, capital must last, how patient, it can be, how much volatility can it absorb, how quickly it must be accessible. The triple A, adequate, accessible, after tax, always there. So the four A's, okay, adequate, accessible, after tax, always there. Okay, the four A's, adequate, accessible, after tax, always there. These are your cash reserves. And rapid aligns exposure to time. And this alone, it neutralizes panic selling, forced exits, like missed opportunity, identity attachment, like, oh, Harold, sorry, but we gotta get out of these options before they expire. I gotta sell these things out now and I gotta go put the money over here and such and such. It's like, well, why didn't we put that in the plan? Well, I didn't really think about it like that. And I just kind of felt like this would be the better way to go. Well, a lot of times it may not be. And now what we have the ability to do is we have the ability to use AI to stress test the plans. And we can run many different scenarios and stress test these plans and make sure that the outcomes, or how can I say this? The strategies used can be tailored to your exact personality. And so capital is no longer guessing when something will work. It's prepared for how long it might take. And the biggest process advantage that most investors never experience is this. When a process exists, decisions stop feeling urgent, volatility stops demanding action, narratives lose authority, and confidence stop being performative, right? You don't need to be right now. You need to be prepared always. Okay. That's the most important thing. And that is the advantage propaganda can never replicate. And here's why this matters for the rest of the episode. Now that we've defined what a real process looks like, we can connect it directly to everything we exposed in earlier series. Okay. And this is how real investors actually win over time. And a lot of times, most investors think they must choose between engagement and sanity. No, you don't. Many investors, they think they only have two options. Option one, stay fully engaged, follow markets, constantly react, quickly absorb nonstop information, ride emotional waves. And option two, they just disengage, stick the hand in the sand, stop paying attention, set it and forget it, ignore opportunities, hope nothing breaks. Both options are flawed. Constant engagement creates reactivity. That's crazy. Total disengagement, it creates blindness, right? Just I don't know. I just trust you, Harold. I don't need to know what's going on. You do need to know what's going on. And rapid exists to solve this false choice. The problem is not information, it's unfiltered information. How do you like break this stuff down and put it in its proper place? And most investors don't suffer from lack of information. They suffer from too much unfiltered input, like media headlines, market commentary, social feeds, expert opinions, urgent narratives, all arriving without hierarchy. It's just like all over. And this is when everything feels important. Nothing is ever evaluated properly. And I think Rapid, it introduces filters before opinions. And this is very important. Instead of asking, is this news bullish or bearish? The process asks, what money segment does this affect? Like, my short term bucket, my long term bucket, my intermediate bucket. Does this change the job of this money? Does it violate an existing rule? Does this shorten or lengthen the time horizon? Does this require action or just awareness? Like, I always tell my clients this, it's one thing to be aware, but it's another thing to be afraid. All right. You can be aware of something, but you don't need to fear it. And just because you're afraid of something doesn't necessarily mean you need to take action. And most information fails these filters. And at that point, noise is eliminated without ignoring reality. Okay. And that's the point. Okay. That's the point. Now, the media loses its power inside a process. Okay. You really just you kill what they do. And I had a client, I was talking to him yesterday. He said, glad you called. I've been listening to your market minutes and stuff like that. And he said, I have a question for you. He said, are you having to put out these market minutes because people are always calling you and scared of what's going on and like questioning everything you do? Because it sounds like you're having to like reassure everybody all the time. I said, no, Mark. I said, I'm not reassuring everybody all the time. I says, I'm just having to debunk all the crap that they're hearing. And a lot of times clients may not necessarily tell me what they're hearing. I know you're hearing it because you're not like deaf, dumb, and mute. The TV's on, you go out, you got friends, stuff, information is everywhere. Newspapers, you're going to see it. And the media narratives, they rely on urgency. They demand like immediate reaction, like right now, emotional interpretation, like move, do something. Okay. Binary thinking, crazy. But urgency only works when the decisions are unstructured, untethered. And inside of rapid, actions are predefined, thresholds are known, liquidity exists, and time is segmented. It's important. A headline no longer asks, what should I do? It asks, does this trigger anything? Most of the time, the answer is no. Harold, what should we be doing? In Japanese, they say nani monai, naidas, nothing. Don't do anything. That's not apathy, that's control. Okay. That's the strongest emotion. It's the strongest thing to do is say no and then control yourself. And you have to neutralize narratives without rejecting them. Rapid does not reject narratives, it demotes them. Okay. Narratives become inputs, not instructions. They're monitored, not obeyed. This allows investors to do several things. You can recognize regime shifts. You can see opportunity forming, right? You can notice that the risks are building in a certain position. Okay. And you're exposed, right? You know that. And you prepare adjustments, right? Without being dragged into identity defense or reactive behavior, you don't fight narratives, you outgrow them. That's the most important thing. And incentives, they lose their leverage too. Much of the financial propaganda works because incentives are invisible, and Rapid makes incentives irrelevant by like shifting the focus from product selection constant movement, activity-based decisions, and it shifts it to like outcome design, rule execution, capital function. And when decisions are not tied to transactions, incentives lose their influence. And advice becomes very, very, very evaluable. And opinions become optional. And the pressure goes away. This is what it's all about. Like, no stress. No stress, bro. We get them already. No stress. It's all my Hawaii people. Now, here's why this is different from just ignoring the noise. Ignoring the noise is a willpower strategy. And willpower, it fails under stress every single time. And rapid is a design, it's a design strategy. It's not willpower, it's a process. It assumes again, stress is going to come, emotions they're going to go up, and narratives they're going to tempt you. You're going to hear stuff, right? You're going to hear this AI bubble, tempted to get out of your Nvidia stock because AI is in a bubble. It's all the circular stuff going on, and we don't like that, and this and that, and Palantir is too expensive. Like it's whatever. And again, it removes the need for self control at the moment it's weakest. Okay, very important. And design beats discipline every single time because we all going to have weak moments. I'm not exempt. I got a speeding ticket the other day because I had a weak moment. I know what I should have done, and but I did something different. And to me, I'm a very defensive driver, and I don't want to crash nobody. I don't want anybody crashing me. So sometimes I overdo things, right? So instead of like going 75 to go around the car, right? Because I'm like they're trying to force me off an exit or something stupid like that, or they're trying to like road rage me or whatever. I speed up, 100 easy, boom, you're there in 2 seconds. You know? But was that the right thing to do? Nope. I should have slowed down because then the cop caught me. He's like, "Hey, we saw you on the camera." Da, da. Like, okay, whatever. Mm, right? I should have been more disciplined. I'm not exempt. And here's the result. You need calm without complacency. Investors operating inside a real process experience something very rare. They're calm without disengagement. Like this is how I feel every day. It's almost like a Zen kind of thing, it's like a flow. They stay informed, but not alarmed. Be informed, but not alarmed. That's what I tell my clients all the time. Stay informed, but don't get inflamed. All right. Don't let this stuff like incense you like, oh my God, I'm enraged. They stay invested, but not exposed blindly. They stay confident, but not rigid. They can change. And that combination is impossible without structure. And here's why this sets up the final pieces. Now that I've shown you how rapid neutralizes noises and noise, we can address a much deeper transformation. And this is very important. When the process replaces identity, confidence becomes durable. It's lasting. And here's why identity feels like confidence because most investors they confuse identity with confidence. Confidence is just a problem. And when you identify as a long-term investor, an aggressive investor, a contrarian, a believer in a theme, it feels stabilizing, right? It's like you're on grounded footing, you're on solid footing. You don't look at nothing else, right? You just stuck right there. You feel good. No matter what happens, you're gonna ride it. But identity gives you a sense of direction, a narrative anchor, emotional continuity, and a way to explain decisions. But identity-based confidence is extremely fragile because you can get your identity, your confidence crushed real easy because it depends on being right. And as soon as you're like criticized, boom, you're all defensive, like, or at least not being publicly wrong. And the problem with confidence is that it requires defense. Identity-based confidence collapses under pressure, right? It forces investors to defend positions and rationalize losses, ignore signals, delay exits, and they double down emotionally. And at that point, confidence is no longer empowering. It's just like you're stuck. You can't get out. It's like being in a bad relationship. It's like being with the wrong advisor for so many years. You know your situation is not getting any better, but because they were referred to you by a family member, you go to church with them or whatever, you just feel like if you step out, you're stepping out of bounds and you're gonna be excommunicated from the family because you broke this rule and you never step out. Say, what? And here's what process-based confidence feels like. Process-based confidence feels very, very different. It's just different, okay? And I feel like our firm, we have that. It's just something different. When you come into contact with our firm, you meet me, you meet anybody on my team, you talk to anybody on my team, it's just something there that's different. I don't need constant validation. We don't need to be patted on the back every time trades explode and they go up 1,000%. Like that's what it's supposed to do. you know, and here's I used to have a job before, and I think I might have shared this in one of the shows. I work extremely hard. I worked on the weekend. It was a corporate job. I was in the weekends. I was there late at night. I was there early in the morning. And one of the VPs like, "Don't you ever go home?" I was like, "Look, man, I ain't got enough money to do the things in life I want to do. All right." And he's like, "Yeah, but you're super successful right now, and you should enjoy the fruits of your labor." I said, "Bro, the fruit is not enough. It's not enough." And so I had to constantly get it in. And but I appreciated the kudos and stuff like that. But again, we don't need constant validation. We don't need narrative agreement. We don't need perfect timing. We don't need public confirmation. And process-based confidence feels like it comes from knowing what your rules are, when they trigger, what action follows, how risk is contained, where liquidity exists, where the money at. Like we can use it and take advantage of opportunities. And you don't feel calm because you're sure, you feel calm because you're prepared. And I want to talk about how rapid was going to help you make this shift permanent. It forces investors to externalize decision making. It's not an internal thing. Instead of asking what do I believe, investors they ask what does my process require? What does my plan require? Does my plan require me to exit out of this position prematurely because everybody's saying so? Mm. This moves decision authority out of ego and into structure. When volatility comes up, rules activate, okay? Segments respond, exposure adjusts, liquidity absorbs stress. There's no need to reinterpret identity. The process, it will execute. Like, I'll have people who will call me sometime and they'll say stuff, and I'm not mad at you guys for doing this, okay? So if you're listening, don't take it the wrong way. I'm not mad at you. But they'll say, "Oh, this thing is down this much," and I was like, "Well, how much of this money do you actually need over the next 10 years?" "I don't know, not much of it." And it's like, "Well, what is the concern here?" "Well, what if I lose it all?" Okay, that's a real valid question. How much of it do you need anyway? Do you need all of it? No. So if you lost all of it, what would it even matter? Of course, nobody wants to do that. But I just want to expose something here. This is where you say, okay, what you're really going to need, that money ought to be in your short term bucket. And again, you're not focused on the intermediate bucket and long term bucket because, again, it's not if the positions are going to go down, it's how long does it take for them to go back up if you don't sell them for a loss? Or even if you sold for a loss and you rotate it, the whole entire portfolio, what's the historical time frame for the recovery? And for us, it's anywhere from 6 months to 18 months, depending on your aggression. We're not waiting 6 years to get the portfolio back up. I mean, you can go through a bear market, bull market in that same period of time and be good because you're rotating at the right time. The process execute. This kind of confidence, it survives bad markets. Okay. Identity based confidence, it evaporates when market turns. Process based confidence, it gives you strength because bad markets are not failures of the process, they're inputs. They test segmentation, liquidity, rules, exposure alignment, all that good stuff. And when a process handles stress as design, man, confidence grows. Like taking off in a plane and that thing gets up there and it's like it's all built sturdy and strong. You go through turbulence and the wings on a 737 can flap like birds, whether you know that or not. They have such a wide range of motion without hurting the structural integrity. It bends, but it does not break. And your portfolios have to bend, but not break. And you have to be okay with that. Not because outcomes are good, but because survival is proven. And here's the emotional freedom that a lot of investors they never experience. When identity no longer dictates behavior, exits they don't feel like failure, adjustments don't feel like weakness, hedges don't feel like doubt, and patience doesn't feel passive. Decisions become natural. The emotional neutrality is not indifference; it's a strength. And why this transform long-term outcomes is very important to me. Investors who operate from identity experience like cycles of confidence and regret, overreaction, paralysis, narrative swings, and inconsistent results. Like they just can't constantly get it done all the time. Investors who operate from process experience, again, consistency across cycles, adaptability without panic, confidence without rigidity, and engagement without exhaustion. Like, oh my God, I am so tired of dealing with this. And over time, that difference is just gonna compound. All right. So I want to wrap up episode 10 of this series. All right. And today we're talking about from propaganda to process, and it's how real investors win over time. And why most investors don't need more advice. Here's why. Because investors are not failing because they lack ideas. They're failing because they lack an operating system, an OS. Advice gives opinions, philosophy gives perspective, operating systems give repeatability. Without an operating system, it's hard because every decision is reinvented. Every market event feels urgent. Every drawdown feels personal, like, oh my God, I'm losing money. Every narrative demands attention. Did you hear what they said on TV, Harold? Why aren't you doing something? And this is why even experienced investors feel exhausted. Trust me, man, I get tired too. This job is hard, right? Because if it was easy, everybody would be doing it. Like everybody would be like owning their own bright tree wealth management, time to stop doing what you hate. Like everybody would be doing that. They are running complex portfolios on intuition alone. That ain't gonna get it done. And here's what it means to have a real operating system, right? The roles get defined, the rules get defined, and the responses under stress are defined. And Rapid, it functions exactly this way. It doesn't tell investors what to think, it tells them a couple of different things. How money is organized, what each segment is responsible for, what rules govern action, how stress is absorbed, how opportunity is redeployed. And this removes ambiguity, not flexibility. And Rapid Retire is not a style. It is not conservative. It's not aggressive. It's not passive. It's not active. It's not bullish. It's not bearish. Those are styles. And styles fail when regimes change. Like I tell people all now we got this president, the orange guy is bad, he's this, he's that. Okay, whatever. Biden, he can't walk, he can't do this. Okay, whatever. Obama's this, Obama's that. Okay, whatever. We had Bush, we had Clinton, we had okay, whatever. Okay, I can't say it doesn't matter. They all matter in different ways. And again, it can't be about style. It has to be about process. Like, where do we rotate to now? We got a guy and you don't like, I don't care. What do we rotate to? What policies are they implementing that will drive your portfolio potentially to the moon? You got to go there. Well, the media says this and that. I don't care because that's propaganda. And this is what I've been telling you guys about this whole entire show. Rapid is regime agnostic. It works because it doesn't depend on one outcome, one narrative, one market condition, one personality type. Okay? Does not. It adapts because the rules respond to conditions and not beliefs. And here's how everything in this series connects right here. I know I'm going on kind of long, but this is the last one and it's very important. I don't ever want anybody to say, well, nobody ever told me about this. Nobody ever told me about that. I hear this stuff all the time. And it's like, if you don't live under a rock, like if you're listening to the show, please pass it on to somebody so they can listen to it because it's very, very important. Every failure mode we expose disappears inside a real operating system. The problem is most people are financially ADHD. Like they literally can't sit still in one process long enough to see it work, right? They're chasing this, they're chasing that, they're chasing this, they're chasing that, like squirrel, squirrel, squirrel. Like media noise loses urgency in a process, in a system. Narratives lose authority. I don't care what they say. I don't care who they are. Okay. Incentives, they lose leverage. Identity loses control. Fear loses its timing and advantage. Overconfidence, it loses its permission. Not because investors try harder, because the system does not allow those factors to drive decisions. And the last thing I want to get into is this. Inside a system, markets are inputs, not threats. Volatility is data, not danger. Drawdowns are scenarios, not crisis. Opportunities become like you can take advantage of them. It's not emotional. And investors stop asking, what should I do right now? They start asking, what does my system do here? And that's a very, very, very important shift. So the long-term advantage most people never access is this. Most investors experience markets as a series of emotional cycles: excitement, anxiety, regret, relief. Investors with an operating system, they experience markets as information, adjustments, execution, review. And over time, this is going to produce better decisions, fewer forced errors, less psychological wear and tear on your mind, more consistent participation, higher quality compounding. It becomes fun. This advantage is invisible in any single year, but man, it lasts for decades and decades and decades. So I want to talk about the final takeaways from this series. And if you take away like one thing from financial advice versus financial propaganda, let it be this. The problem was never the market. The problem was operating without a system that could survive it. And Rapid exists to solve that problem, not by predicting the future, but by making sure you are prepared for it. So, if this series made you realize these following things, here's what I want you to do. You've been reacting more than operating. Your decisions feel heavier than they should. Like, oh my God, what do I have to do? Your confidence depends on being right. Your strategy feels more like beliefs than structure. Then it's time to step back and install a real system. Go to www.brightfg.com. How many W's did I say? I say like 4 W's, right? Just go to brightfg.com, click on contact us, and schedule a session to talk to me for free. Not to chase returns, not to time markets, but to build an OS that allows you to stay engaged, adapted, confident, no matter what the market does next. Okay, so thank you for joining me for episode 10 for the entire financial advice versus financial propaganda series here on the Stop Doing What You Hate, How to Win the Retirement Game. All right, so we're going to get disciplined, we're going to get structured, and we're going to win. So thanks for tuning in, everybody. And until next time, 1, 2, 3, let's get it.
This is the podcastfactory.com.